Hello everyone. Today let's talk about how the cash flows within the banks and some basic information about balance sheet. Here is a chart about how the flow of the funds happening within the bank. In the middle, eBank is the bank we are interested in. If you look down, it has some reserve requirements with the central bank. So eBank has to put some money in the central bank as a reserve. eBank also works with other banks. If you go top the box, it has banks A, B, C. Within banks, they can do a lot of interbank actions. For example, you can lend money at the ask rate from eBank to other banks. eBank can also borrow money from other banks at a bid rate. It can also collecting deposits from retail, corporate, public. It can also lend money to retail, corporate, and public. This is a simple way to demonstrate how the money flows in the bank. Here, eBank is the one we are interested in. And now let's look at a basic simple balance sheet. For balance sheet, we are comparing the asset versus the liability and the shareholders' equity. Why we call it balance, the total number has to be same. At December 31st, 2000, here let's look at the asset on the left side. It has reserves with the central bank, 40 million, loans, 500 million, interbank loans, 300 million, government bond, 230 million, fixed asset, 30 million, total 1,100 million. From the liability and shareholders' equity, right side, we got the deposit for 800 million, interbank deposit 200 million, equity 100 million, total 1,100 million. It balanced. If you look at some details here, they give you some explanation. Here, as you can see, fixed asset on the left side. It means some buildings and equipment, computers, such things. It's a very small part in the total asset. And for deposit, that's a large part of the funding part from the liability one. So those are the basics about the balance sheet. Here is some kind of key point or takeaways from this book. They call it Asset and Liability Management. The banks have three main sources of funds: the deposits collected from the clients, interbank deposits, and the shareholders' equity. Banks invest in 5 major assets: reserves with the central bank, loans, interbank loans, bonds, and fixed assets. The Asset and Liability Committee controls profit and risks. It includes the president and the heads of the business units, such as retail, corporate, and treasury. So to summary, and that's first, we talk about the flow of funds within bank with central bank, with other banks, and how they collect the deposit and lend money to retail, corporate, and public. Then we give a balance sheet example, the asset and the liability equity part. Thank you for watching. See you.